Welcome back to Money Mind. Your physical shape is a key indicator of health. And in the world we live in today, everyone is at risk of becoming overweight. With more fast food outlets, bigger food portions, energy-saving devices, and a sedentary lifestyle, we tend to take in more calories than we use. And unless we know how to regulate our calorie intake, weight management becomes a struggle. But when it comes to personal finance, taking in more dollars than you use is actually good money management. Still, there are so many temptations for you to spend your money buying expensive cars or branded goods or going for holidays or fine dining. So how good are you at keeping your income and expenditure in balance? Are you a spender or a saver? A survey by Jobs Central has found that close to 60% of Singapore workers save less than 1/5 of their income each month. When it comes to spending, close to 1/4 of workers confess they would spend the bulk of their salary on entertainment. NTU lecturer and author of the book Managing Your Personal Finances, Dr. Patrick Chan, says that monthly cash budgeting helps to enforce discipline in how you manage your money.
Budgeting, it is basically both a behavioral action and also an intentional action. Let me explain what is behavioral. Behavioral is sort of inculcate discipline, meaning, you know that every month this money comes in, I'm going to set aside to use for this purpose. So once it's used up for that purpose, I cannot move any other fund to finance that particular activities. So it's very behavioral based. But I think what is important is also the intentional base. At one point of our life, our relationship with money, it sort of changes. When you're younger, you tend to be very generous. Then you have a family, you will think twice before you spend. Then when you come to retirement, your relationship is very different. You're more like enjoying the fruits of all your hard work.
But is monthly budgeting a common practice?
Do you do a monthly record of your income and expenditure?
Yeah, I do. I used to do that, but nowadays, not really. It's all in my mind.
There is also the issue of credit, which is to spend first and pay later. And credit cards have proliferated in Singapore.
Credit card, I have a few, but mainly I use one only.
How old? About 4 or 5? Why do you use so many?
It's because the way they promote it. Sometimes it's not the need they promote it, and each card has got a different reward scheme. So I will have to optimize it.
Can I just ask you how many credit cards you hold?
2. Yeah. I'm not a credit card fan.
Credit card debt has become a big cause for concern, says Credit Counselling Singapore. In Singapore, there are now 1.4 million individuals holding 9 million credit cards.
Out of these 1.4 million people, we think that there will be about 35 to 40% of them. They will not pay off one credit card, at least one credit card debt, and they will roll over one credit card debt at least, So, by looking at the statistic, what we find is that there's something like 300,000 people, 330,000 people who will be rolling over for, say, 3 months. But at the 12-month mark, there's 14% of them who have been rolling over the debt for 1 year. And even at 24 months, there are people who have been rolling over their debt for more than 2 years. So we have actually a hardcore group of people who we estimate at easily 150,000 people who are just rolling over their debts for years, some of them. And they are not in default. They do pay their minimum sum, but they just don't have enough money to pay off in full.
There are also those who default on their credit card debt.
We have about 50,000 people who are in default of at least one account for 3 months. So in other words, they're much more serious in the sense that they are not even meeting the minimum payment for 3 months.
In 2013, banks had to write off $247 million in bad debts incurred by credit card holders, up by 26% over 10 years. And the situation could get worse by next year, where it might even turn into a debt bomb.
Presently, at least, Banks are allowed to give 4 months of the income for unsecured facilities. And there is really no cap on the total amount of debt which a person can actually chalk up. So can you imagine if there are something like 12 institutions that are giving credit cards. So theoretically, a person can actually almost up to 4 years, of his income, in credit facilities. But what's going to happen next year, come June, is that MAS has now has imposed a rule that irregardless of the credit facilities which you have, your total outstanding cannot be more than 12 months of your income. So what this means is this: if you're over 12 months, the bank has to freeze your credit card facilities.
So who are the typical credit card holders who get caught in a debt spiral?
Typically, they will be about 40 years old, and 2/3 of them will be males, and they would mostly be married as well.
These people owe an average of $80,000 to an average of 7 creditor banks. But how do these people get themselves into this situation?
A lot of them could even be compulsive spender. A lot of them could also be trapped in a situation where their expenses are more than the income because of some family problems, dependent children or aged family members. There are also other people who make silly mistakes like investing in get-rich schemes, or they start a business that fails and they use the credit card facilities to pump their money into the business, with the result that when the business falls, they end up owing a lot of money on credit cards as well. And of course, we have almost 1/3 of them cite gambling as a major cause as well.
Patrick says that individuals should learn to distinguish between needs and wants and differentiate between what constitutes good debt or bad debt.
We have to consider the notion of what is needs and what are wants, you see. So if this is something that is essential for your livelihood, for survival, like food, transport, housing, I think these are needs. Whereas wants is more like luxuries, I want the latest version of your iPhone and all that. Okay, so this is where people use money, even if they do not have the money, to buy luxury goods, buying wants. Then I think that would be more like bad debt. Whereas good debts are investing in assets that will grow. Ultimately will be giving you a source of passive income.
Ultimately, good money management comes down to acquiring good financial habits, like living within your means, managing your debts, and saving for the future. And like balancing the intake and outflow of calories in weight management, you have to balance the intake and outflow of dollars in money management. That's our show for this week. Thanks for watching. Remember,